It's still early if you want to buy Bitcoin today. I don't think it's too late. So, if you don't know anything about Bitcoin and feel like you missed it, 95% of investors don't know anything about it too. So, if you buy Bitcoin now, you're still far ahead. When you look at Bitcoin wallets, it's like going back to the internet in 1996. The internet grew quite quickly after 1996, so it's still very early. 95% of investors don't own Bitcoin, and 99% of investors don't own XRP. That's why I'm playing Tom Lee's tape in today's video and talking about it with you guys. To be honest, I do think Bitcoin is a good investment, but I think XRP is a much better one. I believe that this month, July, will be more exciting than any other month before it. It's a better chance than in the past several months because we can get it at a very good price before rates go down at the end of the year. If someone told you that you could buy XRP every day for 1/10 of what it will cost 3 months from now, wouldn't you jump at the chance? To be honest, I think that's the chance we have right now. So I'm not going to let it pass me by. I was right about this. I talked about the election supercycle when I talked to XRP in November. XRP's price did go up 6 times in November, December, and January, as expected. Yes, we did witness a drop from the $3 top to where we are now. Yes, we have been trading sideways for a while, but I want to remind you that I have been talking about and buying XRP for 2 years before that election supercycle even happened. I bought XRP on the markets every day, and I had lump sums that I had bought XRP with 4 or 5 years ago, before the bear market that came before that one. So, with all of that in mind, I want to play with what Tom Lee says here, because he makes some great points regarding the future of money, US debt, and cryptocurrencies in this video. Hit the like button so everyone can see it. Stay with us till the end. Let's get started. What do you think about the market as a whole? Where we are now, and what do you think will happen in the second half of 2026? In 2025, the stock market encountered a black swan event when Tariff Liberation Day shocked everyone and caused stocks to tumble 20% in the fastest speed, or one of the fastest paces in 100 years. There have only been 12 situations in the past when equities fell this much and this quickly, and I think a lot of folks made the mistake of letting that shock make them bearish. You said that we thought there would be a correction this year, but the fact that we didn't become negative, even though there was a big drop, is because of 3 things. First, we didn't think President Trump would stick to the terms of the tariffs. So, even though they said at first that this was the contract and everyone had to accept it, we anticipated they would eventually change those terms, which is what has happened. And in fact, what we've seen so far is that tariffs are a lot less harsh than a lot of people expected they would be at the start of the year. So things are actually better for us. The second is that a lot of economists convinced you that there would be a recession. Do you remember when all these economists warned a recession was certain? That's why everyone freaked out and sold their investments. But we don't always pay attention to what economists say. We like to keep an eye on the high-yield market. The high-yield market, on the other hand, showed some volatility but really moved in a way that suggested there might be a growth fear. So, a growth scare and a recession are not the same thing. It's normal for people to be careful when there is a growth scare. The third reason we didn't turn negative is that waterfall declines, like the one we observed, frequently come back as a V-shaped rebound. That was our point. This would be a V-shaped bounce, and we were quite sure of it because the VIX, which is a measure of volatility, went up to 60, and during the past 35 years, anytime the VIX has gone above 60, you have to purchase the stock market because that's just plain scary. You have to buy that because the market is so terrified that they're not pricing anything, so stocks went up and down in a V pattern. And now that we're virtually back to the old highs, I see a lot of folks who are still bearish. Maybe some of you in the audience are still gloomy and don't want to buy the stock market because you don't see why stocks come back. But don't forget this. We've already seen a 20% drop in 2025. There is a very small probability that the price will drop by 10% between now and the end of the year. It can even be 0% in terms of statistics. The stock market might go sideways for a while, but the chances of us going down again are very minimal. The Fed isn't lowering rates right now, and Powell, the head of the Fed, indicated he won't lower rates because he thinks tariffs would lead inflation to rise during the summer. That may sort of make sense. If someone stated that to me, I would answer that I get that tariffs should make prices go up, but that's not how monetary policy should really be run. The Fed's job is to ignore supply shocks. If something like a tax causes prices to go up once, the central bank shouldn't change its monetary policy because of it. Because the Fed wants to keep demand in check. This means that they strive to tighten monetary policy when there is so much demand for something that it makes prices go up. But since tariffs are more like a supply shock, the Fed should really ignore them. People in the bond market are starting to come to that conclusion. The bond market did not agree with the Fed at the FOMC meeting on Wednesday. Interest rates have really gone down in the previous several days because they think the Fed should not be on hold. And that's what we've been saying. If the Fed doesn't lower rates now, they have to drop them far more next year. A lot of people think that market rises are only happening because the Fed is lowering interest rates and adding money to the economy. That's why some said the stock market couldn't bounce back in April when it hit its lows. The Fed wasn't going to infuse liquidity. But guess what? We still had a V-shaped bounce. So, it indicates that equities don't need the central bank to go up, but we anticipate they will cut a lot next year, which should help stocks. And I don't sure you truly conveyed our opinion on sectors this year when it comes to positioning. At the beginning of this year, we thought that industrials, financials, and tech were the best stocks to buy. That was the first, second, and third dot. So far this year, the industrial sector has done better than the market, and the tech sector is starting to do better as well. So that's very much how we felt this year. But I think that when the Fed cuts rates next year, it will be helpful. For people who care about interest rates, that should really help the financials and the small and mid caps. Because of all the uncertainty in the markets, XRP, Bitcoin, and other big altcoins have been doing rather well. In fact, they did considerably better than most people would have thought they would during this time. I think that's a really strong sign that